Welcome back. In the earlier video, we have seen what a journal is, how a journal is important, the significance of journal and the characteristics of journal. So, in this video, let's see a specimen of journal. Well, journal is a 5-column table where the first column, date, is to be written, where the first thing to be written is the year, later on the month and then the date. Here in this specimen, year of 2015 is written, thereby the 3 letters of the month of January, JAN, is written, then the date. So the year, month and then the date is written in the column of date. This helps to note the transactions taking place in a day, in a week, in a month, in a chronological order, which makes it easy for anyone to pick the journal entry whichever is needed at whatever time. Second column is that of particulars. This is the main and most important part of a journal, where the transaction that has been taken place during the day is noted, where the dual entry, the dual effect is given with the first line having the name of the account with account behind the name, and the account debited is noted with the initials or the acronym of debit with DR. Then in the next line, after leaving some space, 2 is noted with a comma and the name of the account followed by account is written in the particulars column. Well, after writing the debit and the credit transactions names of the accounts, a narration, a short narration of the transaction taken place is written, where it is started with being and a comma. For instance, cash is received on the sale of goods. Then the cash received will be debited. So the cash will be written over here, cash account debit, and the sales account will be written here with 2 in front, where 2 sales account will be credited. So the cash account debit and 2 sales account credit. The credit is not written, but the space is given before the 2. After which, in the narration part, being sale of goods worth rupees, whatever the 2000 is done for cash, or cash received on sale of goods of rupees 2000 is written over here in the narration part. The third column is that of ledger folio, or which is in short written as LF number, ledger folio number. Here, while we write a journal, we post it later on. So we leave a space or a dash where the page number of the ledger is noted while the posting of the journal entry is done in the ledger book. So the for instance, the cash account debit to sales account is 2000 is taken, and the posting of this entry is to be done. So the page number in which the ledger posting is done is to be written over here in this LF number column. This will help in the future date whenever anyone has to just note down or to check the entry in the journal book or the ledger book. Then the fourth column is that of debit, which is done in the rupees format. Here the account which is debited with the amount is written over here. The amount of debit balance is written over here. The debit amount is written in the debit column with no rupees in the starting, but the table in the initial format has the symbol of rupees, due to which the symbol of rupees is not put in front, while only the amount of rupees is written. Then the last column is that of credit, where the credit amount of the credit particulars is written here in the number format. Well, one thing has to be noted here is the amount of debit and that of credit is always same in any transaction. That has to be seen, or else you are wrong somewhere. After writing a journal entry, a line has to be passed. Not a line, 2 lines have to be passed, which means this entry is completed. Later on, next entry is done with the with the month and the date. Then the debit account, credit, LF number, debit amount, credit amount. When a page is filled with the journal entry, in the last line, the total of that page is to be done, and that balance carried forward has to be written compulsorily, because you are carrying forward, you are taking the total of this page to the next page. So the total of both debit and credit has to be written, and in the last line, balance carried forward has to be written. Later on, in the next fresh page, in the first line, both the debit and the credit balances have to be written in these columns with balance brought in or balance brought down has to be written in the particulars column. Well, after the complete entry of journals for a period of time, the total of the journal has to be done with the words of total in the particulars column in between total, which will have a single line in the above part. Like I'll show you. You have to write this way, total over here. Same will come for the debit and the credit side. Here single line, double line for below. So the total of both debit and credit side should be equal, and the symbol of these 2 lines after the amount shows that the period for which the journal was written is complete, and this is the total of the balances. Now let's move on forward. After seeing the specimen of journal, let's see a few examples by posting the journal in the books of Mr. A. We have to record these transactions in the books of Mr. A. It is for the month of March for the year 2014. Here I've drawn a journal with the 5 columns of date, particulars, the ledger folio number, debit and credit, and the heading is given of journal book of Mr. A. So first of all, we'll have to write the year over here, 2014. Then the month of March. So March 1st. The transaction is goods of rupees 5,000 is purchased on cash. So the entry will be purchase account debit to cash, because cash is going out. Purchased goods means goods is coming in. Debit, what comes in. Goods is a real account. Debit, what comes in. Credit, what goes out. Cash is also real account, but the goods are coming in and the cash is going out. So the goods purchased will be debited and the cash going out will be credited. So the entry will be purchase account debit rupees 5,000 to cash account 5,000 in the bracket being goods of rupees 5,000 purchased on cash. A line. Then the second transaction for March 4th. Goods of rupees 8,000 is purchased from Nandan on credit. Here cash is not going out. The goods are coming in. Purchase of goods. So purchase account will be again debited, but cash is not given. So there is this person of Nandan who we have to pay the amount of rupees 8,000. So there is a credit purchase taking place here, due to which the purchase account will be debited with 8,000 rupees and the account of Mr. Nandan will be credited with 8,000 rupees. So the entry will be purchase account debit rupees 8,000 to Nandan account rupees 8,000. Narration being credit purchase of goods of rupees 8,000 from Nandan. Next transaction is goods of rupees 4,000 is sold to Jigna. Here again, as the payment of cash is not mentioned, we consider it to be a credit sale. So the goods are going out because of the sale, and the person Jigna is buying it, or we are selling it to Jigna, and she is not paying us any money. So her account will be debited and the goods sold which are going out will be credited. So the transaction will be dated 7th. Jigna account debit rupees 4,000 to sales account rupees 4,000, being credit sales of rupees 4,000 done to Jigna, or sold goods of rupees 4,000 to Jigna on credit. That too will be fine here. Next transaction is commission received rupees 200. Here the commission is received. Commission is the income for us. So income account means nominal account. Income comes in nominal account. Commission will be then our income. So it will be credited. Cash is coming to us. Cash is coming to us. So cash account will be debited. Cash is a real account. So cash comes in. Goods comes in means debit. So cash account debit to commission account credit. So the transaction here will be dated 12th. Cash account debit rupees 200 to commission account rupees 200, being commission of rupees 200 received. Next transaction is of March 15th. Let's see. Wages expenses paid of rupees 150. Wages expense. Here it is not received. It is paid. Expenses paid. Expenses means a nominal account. Expense is debited. So the wages account will be debited, and paid means cash is going out. Cash is a real account and it goes out, which means it is credited. So wages account debit to cash account. So the journal entry will be wages account debit to cash account. Sorry, I forgot to write the amount. 150 and 150 each. Being wages of rupees 150 paid. In this way, a few of these transactions are recorded in the journal book of Mr. A. Now, these entries were for the single transactions with only two accounts being associated with each other. What about more than two accounts? Let's see. Combined journal entry. Here, in this entry, we find many different kinds of transactions being taken place in a day. Well, these transactions will affect one or the other account. We have two accounts, so two accounts are the basic one. But sometimes it happens that one account is affected while the effect of the other accounts relating to this one will be more than one. For instance, salary is paid. It is paid in cash. So, salary account and the cash account is affected. Similarly, wages paid. Wages account is affected and cash account is affected. In both these transactions, cash account is a common one. So, instead of writing two different entries for these two transactions, a single entry for these two can be written. For instance, the salary account debit, wages account debit to cash, and the total of both the wages and salary can be written. So this is known as the combined journal entry. So in short, when two or more than two accounts are associated in a transaction, then a combined journal entry is to be passed to save the time and even the effort. Let's see an example. Let's take, for instance, salary rupees 600 is paid along with wages of rupees called 400. Along with this is paid, and even one more, let's add the expense of stationery, right? Stationery bought and stationery bought for rupees 200. So for this we can write three journal entry. One is for the salary. Salary is the expense, so we'll debit that account. Salary account debit to cash, because cash is flowing out, right? Salary account to cash account. In the similar way, the wages are paid. So wages is again an expense. So wages account will be debited and the cash account will be credited. So wages account debit to cash account. In the similar way, in the third one, The stationery is bought, maybe pencil, books and whatnot, stapler. These kind of objects when bought, they are the expense for the firm, for the business. So stationery expense account debit to cash. Cash is going. So these three accounts, these three journal entries have cash account as a common, that too in credit one. Even if one was credit and the other one was debit, we can write a combined journal entry. So the journal entry for this transaction as a combined entry will be salary account debit, wages account debit, stationery expense account debit with 600, 400 and 200. 2. Cash account, total of this 600 plus 400 plus 200, total is 1200, right? So this is called a combined entry, with the narration being cash paid for salary, wages and stationery. So this becomes the combined journal entry. Hope so you've understood how a journal entry is passed, the specimen of journal of a journal book. We saw it in the beginning, then how a journal entry is passed is seen, then how a combined journal entry is passed is learned from this video. Hope so you've liked this video. If you've liked, please like, share and subscribe my channel. Thank you.